Okay, so today what we're going to be catching up on is quite an interesting update video. So I haven't really done a video like this before, but I was actually asked by one of my students to actually talk through my trades of the week. So to all of you, as you know, I am a trader and investor. I run the MS Equities trading group. So I also run an investment group. I run a proprietary research group, but I'm also a wealth educator and I train students in about 27 countries around the world. But what we're going to be doing in this video is actually showing you an update of what I do on a weekly basis in my trades. So the opportunity that this is going to give you is for you to actually follow me as I'm executing opening and closing trades on a weekly basis, as well as what I'm looking at on the week going forward. So just to start off with, basically how I'm going to do this for you is I'm first going to be showing you exactly where I have opened and closed the trades throughout the week, and how I'm going to make sure that you know I'm telling the truth is I'm going to be using a verified track record. So the verified track record that I'm going to be using is called My FX Book. Now, My FX Book is a third-party auditing system that allows you to basically link your trading account to their system and they are able to track it. So once you are able to verify and track the results, everything that's posted up there is live and is real. So what we're basically going to be doing is using each order that I've opened and closed that you'll be able to use on the link, and you'll be able to actually see the trades that I'm opening and closing. So this week, we basically went through an incredibly volatile week. Basically, the week that they called this was the week of contagion. Now, just to explain to you what contagion means, is contagion is when a chain of events triggers a mass movement in the market. Usually this is a negative movement. Now, this has happened before. This word has been used frequently in the financial industry. But effectively what happened is there was a massive default event with the Turkish lira right in the beginning of the week. And there was basically a few other events that followed that caused a huge amount of market volatility. Now, a massive issue that we are going through right now is in Europe. It's currently holiday season, and what happens during that period of time is that trading volumes thin a huge amount, and thinning effectively means where people are trading much less and less. So volatility usually rises as liquidity drops. So liquidity is basically the total sum of transactions going back and forth, and volatility is usually caused when that liquidity is not high enough. And effectively what happened in the market this week is I saw that coming, and a lot of other traders saw this coming as well. So the trades that I actually took were very conservative, very short-term trades, and effectively for myself, I left my portfolio to be running, and I just wanted to try and take a few quick trades. And what I'm going to be doing is showing you exactly what trades I took and how you'd be able to learn a bit more from why I took those trades, so you in the future would be able to use the same strategies so you can make money as well. Just what I wanted to start off with is to any of you who want to keep updated with the weekly educational content that I'm uploading to YouTube, make sure to subscribe to this channel and also have a look at the video library, because there are tons of educational videos for you to make use of that you can use to basically improve your trading and investing performance. So on this video, what I'm going to be doing is showing you just 3 trades. The one trade that I took was a losing trade, even though it was a profit. The second trade is basically a trade that I was taking on the edge of the first trade. So the first trade I took was on the New Zealand dollar Japanese yen, and then I moved on to trading the euro Japanese yen, and I focused on trying to make my profit from that trade and closing out the New Zealand dollar position early, which was actually the wrong thing to do, but I still made a profit on it. And then the third trade was on the UK markets, the FTSE 100, or what people call the UK 100. So it depends on what instrument your broker is listing, but it's effectively on the FTSE index. So on these 3 trades, I had a very conservative week. I had a good gain of this week. And what I also need to show you is that although for yourself, you might have a weekly target of, let's say, 1% a week or 2% a week, for myself, I run an investment group, so I have to be incredibly conservative. In my investment group, year to date, we've returned just over 20.2% over the last 11 to 12 months. And basically for myself, what I focus on is returning anything between 1% to 1.5% every single month. Very, very conservative, but I manage very large accounts, so it obviously makes sense. So every single week, what do I focus on? Making anything between 0.20% to 0.50% every single week. This week, we managed to scrape through with just 0.20% gain, But what I'm going to do is show you exactly how I managed to do that. So basically what you're seeing on the charts is starting off in the Euro Japanese yen trade. And actually I'm going to start off on the New Zealand dollar Japanese yen trade. So effectively what happened was I was focusing mainly on the Euro Japanese yen, and then I decided to move over to a cross correlation pair. So that's a cross currency. And I effectively saw that there was serious opportunity for the market falling within this range. So as you can see here, if I take away these, you can effectively see that there was a bearish range, a bearish downtrend that was forming on this level. And what you could see is that majority of the price movement was moving down this support level. So what you can effectively see, if I just take a pink rectangle, you can see that, oh, that just disappeared. You can effectively see that there are strong levels of support being tested all the way down this trend. So what that effectively means is that not only are we experiencing a very, very strong level of support down this trend line, we've got very little resistance at the top. So what that can effectively mean for us is when we see a strong level of support testing, but not too much of a resistance test, that usually means there's an overall bearish trend to that market. Now, this allows us to know that if we are going to try and buy up on that currency pair, we have to be very careful because the support level is being tested a lot more than the resistance level. So what I basically did was I tried to focus on looking for the next historic support level. So effectively what I focused on is having a look at where the historic support levels were on this trade. And what I had a look at is way back when. We're looking at just in 2016, so between January and October 2016, there was a very strong range that was being tested in this area here. And this is on the daily charts, don't forget that. So we effectively saw that the market was basically moving down into this low level. And as we could see, the market recovered way back up. But then as we saw, the market moved further into this bearish range here, this bearish trend, and went straight back to that level. Now back in the charts, what you're going to see looking very closely, these blue lines are effectively where I got in and where I got out. So if I have a look on the smaller time frames, you can see pretty closely, I effectively got in way on this position right over here and decided to get out way up above. Now the main reason why I got into this position and then got out so quickly, even though there's such a big overall trend that I could have taken advantage of, is mainly because of the volatility during this week. During a contagion week, you don't really want to be holding large positions. And on this position, I only made 0.01%. So technically for me, it's a failed position, but the position was still a profit. So I wasn't going to be unhappy about it. But what I can consider is that I could have held the position for a longer period of time and waited for the position to recover. So what I'm basically going to focus on next week is to see if the market pulls back slightly and tries to recover back into that range. So if I have a look on the daily charts now, my goal is to try and see if perhaps the market might try and pivot slightly lower and then possibly move up within this range. Now the issue behind this is that I'm not entirely sure where this market could move to. Now in terms of this range, you could see that the market moves slightly lower down to this orange support level and then follows by moving back up to this level here. So if that technically happens, that is what I'm going to be taking advantage of. So next week, I could land up getting back into this position and taking back the profit that I could have made, even though I got out of this position early. So if I show you just on the chart right now on the trading journal, you can see over here, this position was basically executed. It was a buy at 72.855 and it was an exit at 73.01. So it was only a 16 pip profit and the duration of the trade was only 22 hours. So the position could have been done a lot better, but the most important part is having a look at about how I could recover this next week. So moving on to the next trade, I'm going to show you on the chart now. The Euro Japanese yen trade was a lot more complex, and this is where the one trade was a loser. Basically, what I saw in the market was that price action was moving very strongly down to this historic support level, and I thought this historic support level was strong enough to hold price action. So what I decided to do is, mainly because the market was so tight at that period of time, I decided to enter a small position right over here. So this orange line is basically listing the total of the 5 positions that I entered on this market. Now, what you can see here is that once I entered this position, the market continued to fall, and it continued to fall further. So what I noticed is that way back down in this level over here, you can see how the market's pivoted incredibly low, followed by recovering much higher again. I decided to add in further positions there. Now, what this can sometimes do is when the market is in an extreme level of volatility, even though your trading plan shows that all of the metrics I had a look at on the technical analysis side showed that there should be a strong recovery, the market did not want to do that. So what I did is I entered my pending orders way back against the historic support level, and I just waited. And as I waited, the positions got triggered, recovered, and I made a 0.10% gain. So technically speaking, given that the position didn't last me very long, a 0.10% gain was not too bad, but I did get out of the position early. If this was a less volatile week, I would have held the position and waited for the market to recover by a few hundred extra pips. That could have been a very profitable opportunity, but during a week where they're calling the week a contagion week, I want to try and get into the position and get out as fast as I possibly can. So that's just a simple example of how I got into the position and got out of the position, and also covered my losses at that much higher entry position because I entered way lower. So just to talk about how I managed to recover that, you can see way back down here on this orange line, there was a position that I opened, and you can see the position is actually over here, 124.97000. And this was 135 per profit, which was a really good trade. And this was actually the one where I made basically all of my profit from it. So this is the 0.10% profit. And you can see that basically on this position, there is a perfect recovery from that point. So you can see there was a wick that moved all the way down to this level, just pierced my order. It was a pending order that I had open and then recovered perfectly, and I exited the position with a good profit. Now, when I have a look at this trade right now, there could be upside potential. So there could possibly be an opportunity that I could approach next week, get back into this position and see if I can make more money off the position. But once again, it's a profit. I've locked in the position and I can move on now. And the next position is what I've been holding on the FTSE market. So if I move on to the UK 100 position, this is a position that is still open, but at the same time, a position where I've made profit on it. So on this position, I made a 0.10% gain, and this was the biggest position of the week. But as you can see, the market has been within a very interesting area during this period of time. So if I have a look at the weekly candlesticks, you can see here that we have got incredibly long wicks to the upside and downside showing, followed by now one moderately sized candlestick, bearish candlestick, but still an incredibly long wick. So on all these candlesticks, what you can see is that there is an extreme level of volatility. So what you necessarily call a lot of these candlesticks is just spinning tops. That's where price action has no idea if it needs an upside potential or downside potential. And that is just due to the market volatility right now. In the British markets, even though there's a global growth to the entire economy, and the British markets is also showing some good signals for growth, as well as some of the companies in the British traded market are performing well and their earnings results are doing well. There is a lot of instability around the problems to do with Brexit right now. So there's a lot of political instability, and that's why you can see that price doesn't necessarily know where to go. This week, we've had a bearish week. So we've had a week that's shown a definitive movement, but that is not based on something that's happening inside Britain. That is based on something that's happening in the European area based on what is occurring in Turkey. Now, this effectively means that there is a knock-on effect to the British market, meaning that if there is a recovery next week, we're going to see a change to these candlesticks. So if I dig deeper down and I go onto the 4-hourly chart, which I was mainly focusing on, you can see that effectively what has been happening is that there is a range that the market has been trading within. So you can see that just by adding in, I'm going to just quickly change the color of this. By adding in these lines, you can see that the market has been trading within these two bands here. And this range has been moving very strongly. But as you can see, as the market moves way further down towards the bottom of these Bollinger Bands, you can see how price, once it moves below these levels, it completely rejects the level and moves straight back within that range. Once again, you can see over here, there is price moving all the way back down below the level and a very strong price rejection. Now, 2 points. If you want to get this trading set up, it's on a MetaTrader trading video. I'll put the thumbnail up to the video right here. You can go have a look at that so it can help you set up this trading platform on your trading platform as well. But previous video, I talk about how market shows fair value area. And I definitely recommend you have a look at that video, so it will explain a lot better what I mean by the market showing a price rejection level through the Bollinger Bands. So go to this thumbnail here also to watch that video. Just 2 short videos that you can watch, very important. But back on the chart, what you can effectively see is that the price is strongly rejecting these levels as it moves down to that point. And as I could see, as the price started to move strongly lower down to these levels, you could definitely see that the market did not want to be there. So what I've effectively seen is that the market does not want to stay in those lower levels, and it wants to stay within this band of price action and within this range. So also if you have a look on the daily chart, you can see that the stochastic is moving into a strongly oversold area. And what that effectively means is that there is an opportunity for a price recovery. That's definitely something that I'll be using. Now, in terms of these purple lines that you can see here, these are positions that are still open. So I still have a position open much further down in this level here. I have a second position open slightly higher and a third position that is still in a loss, but I had the take profit nearly triggered way back when, just before the market closed yesterday. So what effectively happened was I had positions in this trade where I saw the market was falling, I took buy orders on the position, and slowly but surely I closed some of those buy orders as the market moved higher. But I've set a take profit level and I'm waiting for the market to recover to that point and cover all of my positions. So what that effectively means is what you've seen here is when the market goes through an extreme level of volatility. Let's say, for example, I open a position and that position goes into a slight loss. Even though I know that my trading plan adds up and I know that there's going to be a pivot to the market, I just wait, I stay calm, and I add a position lower down if I know that I can manage the risk. Now here is where the real failure part comes from. A lot of people try and replicate this strategy, but they are risking so much on their trading account that they basically are not able to. When I'm taking this position, I'm only making or losing 0.10 to 0.20% at a time. That is absolutely frighteningly small amounts of money compared to what someone else would try and do when they're trying to make 5 to 10% per week. Now, when I'm focusing on a much more conservative strategy, when something goes wrong, I'm able to find a way to get around it or get through the position. But if you are taking very large positions every single time you open a trade, you just cannot do this. So that is a simple example as to why when the market continues to fall, I'm able to wait, I'm able to stay calm, add a position to that trade, and I'm able to wait for the opportunity to recover. So on this trade, what I'm expecting is throughout next week, there should be a bit more bullish movement that'll move all the way up to my take profits and take the position out. So even though I've made 0.10 on this trade this week, I'm expecting next week to make another 0.15 to 0.25% profit. Now that is great because now I already have a trade set up for next week that'll make my weekly goal for that week. So last week I made my weekly goal, this week I've made my weekly goal, and next week I'll make my weekly goal, which means I've made my weekly goal 3 weeks out of the 4.5 weeks that I have in August to trade, which means I'm also going to fulfill my monthly goal. So that is effectively showing you exactly how I've taken 10 positions this week alone and been able to make my profit. So the things that I'm going to be focusing on next week going forward, just the 4 points that I'm going to be watching very closely in the market is firstly, the Turkish news, what they're going to do with the Turkish lira, how the US is going to announce any movement or any changes or any news about the Turkish lira to see if the IMF tries to step in again and help Turkey. And also most importantly, whatever the Turkish president says, mainly because the Turkish president is having a lot of very big public statements to make against Donald Trump, effectively in a way trying to blame him for what's happened in Turkey. So whatever volatility happens there is obviously going to cause issues to the market. Once again, also the Turkish currency, if the Turkish currency recovers strongly, that could recover the markets as well. But if it continues to fall, that could cause a bit more of a contagion. The next point is going to be talking about what China does on the tariff war. Now, right now, China and the US are in a massive tariff war with each other. And it's basically, they're just throwing back and forth insults and problems and more tariffs and more drama and more volatility in the market. What I really want to focus on seeing is that if China tries to come to the table next week and try and negotiate on something. Now, it could happen, it might not happen, but next week it depends, because that could cause volatility to the market, or it could cause a recovery. Third point is going to be talking about the UK market, specifically because the FTSE 100, this specific trade, is a trade that I've taken, and the UK markets are going to pivot strongly on depending on what happens with the Brexit next week. So far this week, there's been some good news coming out on the Brexit, even though people are still heavily pressuring speculative news, which I'm not focusing on a huge amount. I'm really focusing on the progress of the deals that are being made, but then also most importantly is having a look at what confidence-based news is coming out, because that is going to help recover the market. And then the fourth point is talking about how the market handles this contagion statement that keeps being made. Now, the contagion could spread. It could be another more volatile week next week, or it could recover. It really just depends at the end of the day. Now, there are a huge amount of very volatile news pieces that came out this week that did cause issues in the market that were completely irrational and unwarranted. If I am able to predict this correctly, and the market seems to recover, die down, calm down slightly more, you're going to see a strong recovery to the indexes. I could be wrong, I could be right, but what I've tried to do is stand on the side of expecting the market to calm down a slight bit more, and for the contagion effect to take a bit more of a backseat, and more of a focus to be made on how they're going to fix Turkey, how they're going to be approaching the tariff wars, as well as some of the more focused news pieces, let's say, for example, to do with what's happening with Tesla and Elon Musk, and some of the earning results coming out this following week as well. So, simple example of what I've taken this week. I took 10 trades, 1 was a loser, 9 were winners, and I had made my weekly goal. I'm pretty happy with it. Wasn't perfect, but once again, next week, I'm going to see if I can get back into some of these positions, or hold the FTSE 100 trade and cover for a good amount of profit next week as well. To any of you who want to learn more about how to trade and invest, learn more about what we do at MS Equities Trading, you can visit www.msequitiestrading.com and have a look at how we've trained students in 27 countries around the world. I run a very specialized online training platform that allows you to study online, even to study through your mobile phone on our mobile applications, and learn about how to trade, invest, and manage your wealth. Once again, everyone, thank you so much for tuning in. If you like this video, give it a thumbs up. That helps me out, and I will see you in the next video. Cheers for now.